Bom, muito bom dia, sejam todas e todos muito bem-vindos ao segundo dia do 22º Congresso USP de Contabilidade. Hoje pela manhã nós temos a enorme honra de contar com a presença do professor Christopher Nobes. Eu gostaria de agradecer aos nossos patrocinadores e apoiadores, o Traders Club, a PwC, Deloitte, CFC, Gen Atlas, Concefaz, FIPECAF, CAPES e o Charter of International Management Accountant. Gostaria de pedir que quem tiver perguntas e questões possam fazê-las pelo chat e aqui na nossa audiência presencial, que possam fazê-las levantando a mão que a gente repassa para o professor. A partir desse momento, vou fazer a introdução do professor em inglês e a gente também está contando com um serviço de tradução aqui no nosso auditório. We are very excited about your participation in this second edition of our event. Just in broken the formal protocols for a while. I must say that the largest part of our accounting academic community here in Brazil, including me, have used your papers in our own research mailing about international financial accounting. So thank you so much for your participation. I'm going to formally introduce you by reading a briefing of your background. Dr. Chris Nobes is a professor of accounting at the University of London, Royal Holloway College, and the University of Sydney. He's a visiting professor at the University of Venice and has held visiting posts at universities in Barcelona, New York, San Diego, Auckland, Oslo, and Nederland, Netherlands. He won the Outstanding International Educator Award on the American Accounting Association in 2002 and the Distinguished Academic Award of the British Accounting and Finance Association in 2015. He has been editor of Accounting and Business Research. Chris was a member of the Accounting Standards Committee of the UK and Ireland, and then one of the 2 UK representatives of the board of the International Accounting Standards Committee from 1993 to 2001. He's a member of the Financial Reporting Committee of the Institute of Chartered Accountants in England and Wales. He's a consultant to PwC. Today, in our event, Professor Chris Nobes will bring us the presentation titled as Problems in Translating IFRS, the Examples of Goodwill, Depreciation, Impairment, and Realized Gains. Professor Chris, the floor is yours. Thank you so much.
Thank you very much, and thank you for inviting me. Let me share some slides. Let us begin.
Yes, we can see.
Good. So, a few words about translation theory. Of course, many books have been written about this, so I must be brief. Then we turn our attention to goodwill, then depreciation, amortization, and impairment, obviously closely connected to goodwill. Then the meaning of the word realized in accounting, and then some conclusions and policy implications. A few introductory words then. Most of the language papers go back to Saussure in Switzerland, who distinguish between a signifier, that is the word, such as cat, and signified, that is the thing that the word is trying to tell us about, the animal in this case. And Saussure suggests that the signifier is arbitrary. We could have called a cat anything, as long as everyone agrees what we're going to call it. Also, an introductory point, there are different dictionaries. So there's an everyday dictionary, there's a medical dictionary, there's a legal dictionary, and for us there's an accounting dictionary. And in English, for example, depreciation means something different in the everyday dictionary compared to the accounting dictionary, as we will see. There's a problem for us particularly because when doctors, medical doctors, write to each other, they're speaking, each of them, in the medical dictionary, and mostly when scientists talk to each other, they can use their technical dictionary. But we accountants generally write to shareholders, for example, or other managers who are not accountants. So there's a worse possibility of errors between the two registers. Another introductory point, there's something called a hypernym, which is a large word, a word too big to be clear. For example, the word colour instead of the word green. So if you write some traffic instructions that say drivers should go forward when traffic lights turn coloured, when you mean turn green, then of course there will be nasty accidents on the road. So translators should aim for the target text to be clear to the readers. That would be one approach to translation, and that we would say is about equivalence. But there is another theory that some language papers deal with, which is Skopos theory, that is, that translation should serve the purpose of the original. This might perhaps be appropriate in advertising or poetry or political messages, but the general conclusion in law or accounting is that the purpose is to get the message across. So this leads us back to equivalence. There have been very large numbers of accounting papers on the subject of translation. For example, there have been discussions of how to translate true and fair view, and the difficult words material and probable. There's a paper which asks, why do some companies translate annual reports into English and some not? There's an old paper by my friends Archer and Maclay about translating audit reports. Then here's something modern, a translation of environmental reports. But surprisingly, there was no academic paper about translating company annual reports themselves. Until the last one there, this is a colleague and myself. Another paper of relevance is a detailed study of translations of IFRS and who does the translation. And this particular study finds that the translators in Finland decided not to change the words balance sheet to statement of financial position when the IASB deliberately changed the title of the balance sheet, because they wanted to make it easier for people in Finland rather than keep changing the words. So the translators had invented a purpose, which is to make life easy in Finland, rather than trying to have equivalent words. Probably means then it was a bad translation. Let's turn to goodwill. We could start with a literature review, that is the Bible in this case, St. Luke. Here is the front of a Christmas card saying, peace on earth, goodwill to men. That goodwill, of course, is found in different languages. And here's the translations in different languages. You can see the Latin root words in Italian, French, and so on are much the same. And indeed, the German and the Dutch just say goodwill, really, literally. But when we get to accounting, the English, of course, is still saying goodwill, but we get many different words in different languages. IFRS 3 says, goodwill is the future economic benefits acquired in a business combination. you wouldn't know when you read IFRS 3 that this covers two types of goodwill. The purchase of a chunk of assets without buying a subsidiary, and also the purchase of a subsidiary. The important point for us, of course, is that the first one affects individual legal entities and therefore can affect things such as tax and dividends, whereas the second one cannot affect tax and dividends. However, there is yet another type of goodwill, of course, which does not fit that definition at the top, because nothing is being purchased. So we have at least three types of goodwill going on here then, but the word is always the same in English. It's not the same in other languages. Nearly all words in English about accounting actually come from Italian. So we might go back there. Of course, the Italians invented accounting in the sense of double entry, so they invented the words. Here's the Italian word for internally generated goodwill and non-consolidation goodwill, avviamento. This is sort of goingness. But here's an interesting expression for goodwill arising on consolidation. This is honest. It's merely the arithmetical difference which arises because you prepare consolidated statements. Quite a useful term. What words have we got in Portuguese? Well, depends where we are, in Sao Paulo or in Lisbon. There's the word in Portugal for non-consolidation goodwill. The word in Portugal for internally generated goodwill is goodwill. That is a Portuguese word in Portugal. And as you well know, you have invented a Portuguese expression related to the amount extra that you pay because you have bought future profits. In Portugal, that is called goodwill. In France, they've got 5 types of goodwill with 5 different words for them. Number 1 is the everyday term. Then in IS 38, internally generated, they use a French word, goodwill. When they buy assets without buying subsidiaries, fonds commercial arises there. When they buy a subsidiary, there's lots of words here, but in the end we get écart d'acquisition, which is the bit extra that you pay above the book value of the assets plus extra assets that you find in the subsidiary plus revaluing the assets to fair value. So there are actually 5 different expressions here for goodwill in French, but only 1 in English. Here's a record of that so far then. And you'll notice that the word goodwill turns up in other languages, but only sometimes. And there on the right now is the consolidation term. The blue ones here are in practice what people call it in Italy and France, though the international standard actually says avviamento and goodwill. So quite a mess, you notice. The translators have obviously been struggling here. Turning to depreciation, there's an immediate problem because the English is not good. That is, the dictionary says that depreciation means loss of value. But IAS 16 says that it's the allocation of the depreciable amount over useful life. And to take the example of buildings, which often increase in value, we still depreciate them. So they go up in value, but we still charge depreciation. Clearly, depreciation is not a good word, really. It's confusing for people who are not accountants, at least. Here's the words in IAS 16 tangibles and IAS 38 intangibles. We have, in Spanish, they have amortización for a general description, but when they talk about assets wearing out because of use, they have depreciación. And you in Portuguese have obviously, in a sense, copied the original English words, though maybe this is unfortunate if depreciation is not a good word. Perhaps amortization is a better word, the wearing out of assets, particularly over time. The dying of assets, really, of course, is what it's saying. Impairment, this is even more interesting. We go back to Latin here. The original word comes into English from French, that starts in Latin, to meaning to make worse. There is a completely different Latin word, meaning inequality. This turns up in English as par and pair. And on a roulette wheel, you will have even numbers and odd numbers, black numbers and red numbers. And the French for the odd numbers is impair. You'll see why this is relevant in a minute. The English dictionary says that impairment is to spoil something, and we generally talk about impaired vision or impaired hearing in everyday English. Now here's a horrible surprise. In IAS 36, there is no definition of impairment. Not a good start for translators. But impairment loss is defined as a particular type of write-down caused by damage. There's 4 issues to be distinguished here then. 1, the asset is physically damaged. 2, sometimes, presumably normally, it falls in value economically, a real fall in value. Then, sometimes we accountants reduce the value on the balance sheet, but only sometimes, because the value on the balance sheet is anyway small, it's old depreciated cost. So sometimes damage does not reduce the asset below that. So there has been damage, there has been an economic fall in value, but we do not need an accounting impairment. Then there's the debit to go with the accounting impairment. Here's the official translations in IAS 36. In Swedish, it's downwriting, as you see. The German law has something interesting. Unplanned off-writing. So this is out of the plan off-writing. But in IAS 36, they have fall in value, and that's what we have in all those other languages. Note the French for impairment is dépréciation. See the problem coming there. And the Dutch were aware this is a problem, and they invented a new term, special fall in value. Here's the amusing one. In Brussels, in the EU, the translators obviously had no idea what was going on here, and they chose the wrong word. That is, they went back by mistake to imparitas. And so in Portugal, the word for impairment is imparidade, you can pronounce it better than me, which of course is completely the wrong word. You realize there was a problem here, and so you have reduction in recoverable amount. which is, of course, number 3 here. It's not number 1, which is the damage. It's number 3, which is the accounting reaction to the damage. But that's fine. In fact, the only translation to record the word damage is the Korean. And these are hyponyms, of course, most of these translations. Fall in value is much too vague to be clear. There are lots of reasons why assets fall in value, except physical damage. The market goes up and down, for example, nothing to do with physical damage. So here's a summary of the translations. The dictionary and the Korean refer to damage. Most translations refer to the fall in value. Your translation refers to adjusting the asset. And there's a record of the 3 different accounting standards then. And you can guess where we're going next. We're going to ask, when a French annual report is translated into English, and nearly all large companies, Germany, France, Italy, do translate annual reports into English, what happens to this word impairment? So we look at quite a lot of companies at 2 different dates, and we find, here's an example of what we find. This is Germany and Spain and France and Hong Kong and Italy. So quite a lot of annual reports from Germany say depreciation when they mean impairment. Quite a lot say write down when they mean impairment. A lot of Italian reports say write down when they mean impairment. And of course, quite a lot of French reports say depreciation when they mean impairment. In fact, 39% of German and 39% of Italian annual reports have the wrong word. This is the 2005 numbers on the left. It's 2013 numbers on the right, so it's got a bit better. Something else strange, a lot of countries score 0, that is, they were all correct. But the ones that score 0 are the ones further away from English, such as Japan and Korea scoring 0 here, and China. So we'll come back to that in 1 minute. These errors get into WorldScope or data stream. So if you look up the French companies in WorldScope, they have no impairment because the translation was wrong. The databases use the English reports, of course. The English reports say depreciation when they mean impairment. And so the database shows 0 impairment, which is wrong. And this will mess up your empirical studies. And of course, it will mess up the financial analysis. Translations improve over time. Quality is an inverse relationship to distance, language distance. Why? Well, I think the answer is clear. In Germany, they think they can speak English, so they do not check properly. In Japan, they know they cannot speak English, so they get the auditors to translate the annual reports, and the same in Korea. And so it's done properly. And now, realized. There's a lot of surprises here. There's no definition of realized in any standard, or in the glossary, or in any basis of conclusion sections to the standards. So how many times do you think realized appears in the conceptual framework? how many times do you think realized appears in the standard on revenue? How many times does it appear in other standards? Well, perhaps I hope you are answering the questions to yourself. Here are the answers to those questions. It doesn't appear in the conceptual framework. It doesn't appear in any of the income standards. It's not in revenue, it's not in government grant income, it's not in foreign currency gains, and it's not in earnings per share. Very surprising, and yet it does appear 103 times in all these other standards, still not defined. Here are some examples. At the top, IS1. When is an asset a current asset? When the entity expects to realize the asset, or you notice intends to sell. So realize does not mean sell, apparently. And then we have IS1 parent 93, which talks about taking things out of the second income statement and putting them into the first income statement when they become realized. Then there's IS2, inventories, amounts expected to be realized from sale or use. So apparently you could realize gains by using something up inside the company, not selling it. Surprising. Then we have IS7, cash flows, unrealized gains from changes in foreign currency exchange rates are not cash flows. And then all sorts of standards, lots of realized in IFRS 9 there in the middle of the slide. Second one, information about how cash flows were realized. Now, you might wonder how it would be possible for a cash flow not to be realized. And down at the bottom, we have the same thing. An entity might use realized cash flows. This implies there could be such a thing as unrealized cash flows, which of course makes no sense. Now, we've got four things going on here: cash and non-cash, in the income statement and not, realized or not according to IFRS, and then realized or not according to law. In Brazil and in the UK, we need the concept of realized in order to calculate dividends, for example, what can be paid as dividends. My slide here is about UK law. You could check Brazilian law. But here's an example of a non-cash gain, which is still in profit or loss, credit sales, of course, and gains on unfinished contracts. Foreign exchange gains on monetary items that have not been settled, they're non-cash and they're in the profit and loss account. But according to IFRS, they're not realized. We saw that just now, it says so in IS7. And fair value gains on listed equities are now, these are not sold, but they've gone up in fair value. So they're not cash, but they are in profit or loss. According to IFRS, they're not realized. Share-based payments are obviously non-cash, but they're still in profit or loss. Then there are some things which, according to British law, incidentally, those red things above are realized in UK law. So you could pay dividends out of them. But fair value gains on investment properties are in profit or loss, but they're not realized according to UK law. And then there are some things which are not in profit or loss, but are realized, at least according to UK law, but not according to IFRS. Fair value gains on listed equities, where we have decided to put the gains in other comprehensive income. So this, you notice, is chaotic, and part of the problem is there's no definition of realized. So realized is not defined. It apparently means sometimes received in cash, sometimes received in cash or cash equivalent. Sometimes it means sold. Sometimes it means recorded in the first income statement. Sometimes it just means happened. Sometimes it's gains that are realized. Sometimes it's assets. And sometimes, amazingly, it's cash flows. Wherever you look, though, there's no discussion of a realized expense, and therefore we would not be able to use IFRS to calculate realized profit using any clear definition. I've talked to the ISP staff and board members about this, including Anne Tucker, who you heard from yesterday. And they say they deliberately avoided the word realized in IFRS 15, which I think is sensible. And they also deliberately avoided it in IFRS 13, fair value, to start with in the exposure draft. But then they put it in to the actual standard many times. Different people were writing it because there was a gap in years. So I think this is probably a mistake. And certainly what IFRS says is realized does not fit what law says, at least in the UK. Now notice, this discussion is all not yet about translation. So we have a mess even before we get to translation. Now we do get to translation, and we have words clearly coming all from the same root. You might say from French, really, into English and then back again into all these languages. And even languages that probably none of us can understand, such as Czech and Polish, we have the same word. So I looked at a whole page of Polish, and the only word I understood in the whole page was this one, the Polish word for realized. Usually, these are the words used in the translations of IFRS, but not always. Here's some examples of not. So in IAS 1, the Swedes say sold instead of realized. And here's some examples of, this is Portugal, not you, saying, using words other than realized. That is, where the original said realized, you say, the Portuguese say something else sometimes. The translators obviously decided to try to be clearer. This is then cases where the translators have not used realized. What about the other way around? Cases where the translators have used the word more often. So, for example, where the French translators have used the word réalisé more often than the word realized in the original. If we take the example of just one accounting standard on financial instruments, realized appears 15 times in IFRS 9. This is not counting the examples or the basis for conclusion. This is just the compulsory part. How often does it appear? How often does basically the same word appear in the French version? Answer: 26 extra times. So nearly 3 times as often then as in the original. And in the French version, it's used to translate all sorts of things: occur, made, performed. So it's clearly not a technical term by the time it gets into French. So this term is on the loose. It has no particular meaning, and yet it appears to be a technical term, of course, you might think. So my suggestion is that we should delete it. How would I delete it? Well, here's some examples. 1 cash flows, 1 asset, and 1 gains. In the top one, it says realizing cash flows. I would say generating cash flows. In the second one, expects to realize the asset or intends to sell or consume. I would just delete the realize. It's confusing and unnecessary. And then we have the moving things from the second income statement to the first income statement. Well, surely it would be clearer to tell people to do this when another standard says so. We do not need the word realized. This leads us to translations of the expression other comprehensive income, the second income statement. This is a major problem. The first income statement is called profit or loss, and these words are obviously in net. Profit is a net thing. By contrast, income is a gross thing in the framework. We have income and expenses, not netted. So this is not a good start then for translators. If the first income statement has a net concept, then presumably the second income statement should have a net concept. The French and Italian have added the words components, which helps. Here we are. So we've got élément in French and componenti in Italian, which is a useful clarification. The Germans don't have comprehensive. Notice the difference between Portugal and Brazil here. This shows how the translators are struggling to make sense of this. The most interesting one and the worst translation is this Dutch one, unrealized. This is just wrong, of course, because there are plenty of things in the second statement which don't fit this. But there are plenty of things in the first statement which are unrealized, such as gains on investment property. So this is not at all a split between realized and unrealized, and this translation is wrong. The reason it's wrong, of course, is because there's no definition of realized and no principle behind the second income statement. There's no explanation of why some things are in it and other things are not. The IASB admits that there is no explanation. It's a series of accidents in the past. Overall conclusions then. There's no general definition of goodwill. The definition doesn't cover IS 38. There are 5 different types of goodwill in France with 5 different expressions, but in English there's only one word. This is confusing. The fact that we have often found Portugal and Brazil using different translations is a sign that there's a major problem going on here. One of the problems is that depreciation is a bad English term, which is in itself confusing before translation. Amortamento would be better, and the German planned off writing is perhaps the clearest. The next problem is that there's no definition of impairment in IS 36. Surely not sensible if a standard has to be translated. Nearly all the translations are hypernyms. They are too wide to be clear. Some are coinages, which makes sense. I'm not proposing a literal translation. The translators need to work out what these standard setters are trying to say and then attempt to convey that. Most of these problems, I think, do not affect accountants directly. That is, I suspect that it doesn't matter what you call impairment, because the accountants will follow the accounting standards detailed instructions, whatever the translation of the term impairment. There might be a problem among accountants, though, because if the French accountant says this building has lost value, when the accountant means this building is damaged, that is a very different thing to say, of course. Damage is much clearer than lost value, if that's what you mean. But the real problem is that the translated annual reports are wrong, and this gets into world scope as well. Realize then it's not in the conceptual framework. It appears 103 times with different meanings. And this is a major practical problem in countries such as the UK, where realized is relevant in law for calculating what can be paid as dividends. Sometimes the word realized does not come réalisé or equivalent, but then on the other hand, very often réalisé is used where it wasn't realized in the original. And so I suggest, as you know, that it would be best to delete the word entirely from the whole book. The second income statement is a particular problem. Policy implications for the standard setters. It would be best to avoid hypernyms. It would be best to avoid words which mean something different in the everyday register that shareholders and managers use. Surely terms should be defined, which will help the translators and the rest of us, I suppose. Equivalence would be the best aim. Coinages can be useful. Inventing new terms and defining them can be a way of solving translation problems. Translators can do better than equivalence by improving on the original once they've found out what the standard setters mean. In the meantime, analysts need to be careful because the translations are sometimes wrong. And the same applies for us, of course, as researchers, as we have seen. So I stop there and would be happy to take any questions. I see there are 41 things in chat, but many of them are saying hello, perhaps. So perhaps somebody could tell me which questions to look at.
So, thank you so much, Professor, for this brilliant presentation, insightful. That raised some reflections about how we have been translating the IFRS into the Brazilian accounting standards, and mainly the impacts of this translation issues on the practical effects. So I'd like to ask you a very first question. Do you consider that we have some educational initiatives still in the under degree stage that could be mitigate for this translation issues?
Good. Well, I certainly to take my own teaching in the UK, you might think perhaps that since the standards are written in English and most companies, including obviously American companies, the biggest stock market in the world, produce reports in English, that possibly in UK universities we could forget about translation. But we do not, and certainly we discuss these issues, particularly in the third year of for our accounting students. We discuss the translation of standards and the translation of annual reports. Of course, British law on accounting comes from Brussels. We still have most of our accounting instructions from the EU. We've kept them, and they were written in French. And some of the rules don't make sense because they were written in French and badly translated. So even in Britain, in law, we have problems because of translation. So it's a topic that we discuss often when in our accounting courses, and I think it would be a good idea to do that. Obviously, even more important when you're in a country where English is not the normal language, and yet the accounting standards and American annual reports and so on appear in English. So I think it should be quite an important part of the curriculum for studying accounting. Note, not learning English, which you do anyway, presumably, but discussing translation as a particular issue.
Great, great. We received another question here, that if you would say that the translation troubles could influence the level of companies' asymmetric information.
Yes, possibly. So asymmetric information then being where the managers inside know more than the people outside, or where some people outside know more than other people outside. Indeed. And to take an example then, when I read French annual reports, or that is annual reports from French companies, I look at the French because I know the English is probably wrong. And in a sense, there is asymmetric information here then. I will discover impairment expenses in a French annual report that people who read the translated English report will not discover. And in that sense, I get better information because I read the French, which is rather a surprise. So yes, there would be a way perhaps of making money here, because you get better annual reports by reading the original. This will not help me with Chinese companies or Japanese companies, of course, because I cannot read Chinese or Japanese, but it might help you. Certainly, if you can read Spanish, which you probably can, it would be better to read the Spanish report than to read the English translated report of a large Spanish company.
Great. It's very, very interesting. So do you consider that account terms or words have an economic meaning? This economic meaning in some situations could mitigate the translation impacts, for example?
Well, so I suppose I'm not sure that the words do have an intrinsic meaning. So that is, going back to the idea that you could have called a cat anything, most words are, in a sense, random. So I don't think that we should rely upon a word with having an intrinsic or an economic meaning. It might be worth distinguishing depreciation and impairment on this topic. So depreciation is a very boring expense, of course. And let's take the example of goodwill amortization. If you amortize goodwill over 10 years or 20 years, you get exactly the same amount every year, 10% a year for 10-year amortization. So the amortization expense is very uninteresting because it's the same every year. By contrast, an impairment expense is a nasty surprise. And so there's some chance that it has information content. So even though it is difficult to calculate impairment, and it is perhaps easy for the company to cheat, at least charging an impairment might be telling you something interesting, whereas charging amortization is not telling anyone anything interesting. And so in that, to link it to the question, impairment then has some sort of economic meaning, whereas depreciation doesn't. The depreciation expense does not really have an economic meaning. And therefore it's particularly bad for companies to translate impairment as depreciation, because they're telling us the word depreciation, which is very uninteresting, and they're hiding the word impairment, which should have been interesting.
Great. Thank you so much for your answer. I have time for one question, and I'd like to ask you if you personally consider that countries more affected by problems with translation, accounting translation, is less likelihood to participate in the ISB due process, like, for example, send comment letters or something else.
Yes, I know this is one of your topics. Let's ask ourselves, who are the people sending the comment letters? So we're not really talking mostly about shareholders here, of course. We're talking about large audit firms. They are one of the main people who send in comment letters, and large companies. And do large audit firms and large companies suffer these translation problems? I'm not so sure, because if, for example, you go to PwC in Frankfurt in Germany, or almost certainly in Sao Paulo, they will be speaking English. And certainly they will be using the English version of IFRS. Nobody in Germany uses the German version of IFRS. They know it contains mistakes, so they will use the English version. And this applies in Norway and Sweden and the Netherlands and the Czech Republic. Everybody uses the English version of the accounting standards. And similarly, if you're in the headquarters of a very large international company in Stockholm or Frankfurt, English is the language of communication inside those companies, even though they are based in Germany or Sweden, because there's staff from all over the world and there's letters going all over the world. So since most letters come from auditors and companies, big auditors and big companies, and since in those places English is on the whole the language of communication anyway, I think we've got a special set of people writing the letters for whom language problems are smaller than would be implied by a general study of language. So I would take that into account. This is a different issue from shareholders reading annual reports, which we've been discussing, because shareholders tend not to write comment letters. So that's, I'm sure it might be a problem, but I think this is a special feature of people who write comment letters.
Perfect, Professor. Once again, thank you so much for your presentation, for your insightful and consideration for our event and our audience. I'd like to say that this presentation is one of the most relevant for us here, especially because we are dealing with this kind of problem in the Brazilian and the translation. And once again, thank you very much.
Thank you for inviting me. Have a good rest of conference.
Thank you. Have a nice day.
Okay, goodbye for now.